Our final presentation comes from Addison Snell. Mr. Snell is the CEO of Intersect 360 Research and a veteran of the high-performance computing industry. He launched the company in 2007 as Tabor Research, a division of Tabor Communications, and served as that company's VP and GM until he and his partner, Dr. Christopher Willard, acquired Tabor Research in 2009. During his tenure, Addison has established Intersect 360 Research as a premier source of market information, analysis, and consulting. He was named one of 2010's People to Watch by HPC Wire. Today, Mr. Snell will present Supercomputing to the Rescue, HPC AI Market Update. Addison, thank you for joining us again. It's always a pleasure to have you. You may begin.
Hey, thanks, Brian, and to everybody on the HPC AI Advisory Council team. This is always a pleasure for me to get to present at these events. Although I prefer it when I get to travel and be there in person, I'm sorry that I'm missing the trip to Canberra, and I hope to be able to participate in person in 2021. Some of the conditions leading us to these virtual meetings are some of the same conditions that are affecting the HPC industry right now, and I'll talk about that from a market perspective as we talk about forecast and trends that we see in high-performance computing and AI. I have way too much content in this presentation right now, and I realize that I'm at the very end of the conference, and there's been a lot of wonderful content prior to me. So what I'll try to do is share very quickly and leave time for questions at the end for anything you'd like me to go into more detail on. Starting with the new high-performance computing, we still like to use the term HPC because as analysts, that's the market that we're tracking. We can track it as a budget that organizations have for spending on HPC, which for the most part has been scientific and technical computing. And that has been an enduring market, although over the decades, the terms like HPC and supercomputing tend to fall into and out of favor. And people say, no, wait, it's broader. No, wait, it's narrower. High-performance computing keeps coming back because these scientific and technical applications don't get to the point where they're just solved and we're done. And we say, okay, great, we finished science. We can go home. There are always more degrees of freedom or more realism that we can build into a model. Science begets science and begets engineering, and there's a perpetual life cycle to things that keeps high-performance computing as a long-term stable market. But nevertheless, over the last decade, we've seen topics like cloud and big data or analytics or data science, depending on your term, and now machine learning and artificial intelligence are all becoming part of the HPC spectrum. Not to say that all cloud or all big data or all AI are HPC. That's certainly not true, but there are aspects of all of these things that touch high-performance computing and influence the market, and we track them all to the extent that they influence high-performance computing trends and spending, the budget in the market. So you can find research from us on all of these things. Obviously, this has been the biggest news of the recent years is that we have a new #1 on the top of the top 500 list with Fugaku, which was mentioned earlier in this conference. So I'm not going to recap it too much other than to underline that, yes, this means that HPC keeps going forward. This won't be the last #1 system we'll ever see. It is a very impressive system. It is a nice win in Japan for Fujitsu, for Riken, and it is extremely notable in that it is the first system up at the apex of the top 500 list to be based on an ARM processor, and that diversity in processing elements is a major factor or trend that we're tracking in high-performance computing markets. And in fact, part of what I'll talk about toward the end is that we've got a major end-user study where people gave us ratings of how they track technologies or really vendors in 4 different categories: processors, servers, storage, cloud. And we're seeing increasing diversity in all of these areas, which Alan very kindly set up for me in the presentation just previous to mine. Other big news from this year globally, of course, has been COVID-19. And you don't need me to tell you that there have been all kinds of worldwide projects where supercomputing resources and efforts have been dedicated to combating COVID-19, and that comes in a lot of different forms. Doing the molecular modeling, modeling the spread of a pandemic through a population, etc. There are many different types of applications here. We dedicated more than one podcast to this topic on our weekly podcast called This Week in HPC. The Escalate for COV that's on there reminds me of back in March when this was really starting to become a global pandemic. We did a podcast with Cineca, which is in Italy, of course, was one of the very original hotspots, and it was just after that Silicon Valley in California became one of the first hotspots where I am here in the United States. I'm in my home office now. I'm very fortunate that I already had a stable job working from home, so that didn't have to change for me. My family and I are on almost 6 months now of shelter in place with very limited movement outside the house, and California is still a very difficult region of the world in terms of COVID-19. We were one of the earlier to start locking down in the U.S., but nevertheless, we've seen a steady progression of COVID-19 cases. So this is still very much on our minds here locally, and it's a big part of our industry in terms of this is the sort of grand challenge problem that high-performance computing likes to sink its teeth into. Now, grand challenge problems aren't limited to this. We've seen great examples of all of this, and this is a slide I used recently at a presentation at Stanford to help inspire students, and I've done similar at the ISC conference with students there to look at, hey, you're coming out into the world. What are the big things that you worry about? Do you worry about climate change, pandemics, the rise of population and how it affects the world's resources, natural disasters, pollution, understanding the universe, or new science like robotics and AI? High-performance computing touches all of these areas in terms of grand challenge problems, and it just does not get exhausted and won't get exhausted not only in my career, but in the career of new people coming into this industry. And that's why it's so important for us to continue to engage students in science using high-performance computing resources. And a big reason why I like the HPC and AI Advisory Council's involvement with for example, student competitions and introducing them to high-performance computing and AI. Now, it doesn't have to be at the apex of supercomputing to still be cool. I've seen very cool things that the entry level and mid-range of high-performance computing, everything from construction materials to wiper blades to Tide Pods. And this is where, if I were giving a longer version of this talk, I could do exciting examples of all of these things. The Tide Pod simulation at Procter & Gamble, my favorite thing there is really Tide Pods. What's hard there? Well, it's laundry detergent. The hard thing for them to design was the envelope, the jacket. They needed a new chemical, a new plastic, because the plastic has to dissolve immediately and completely in cold water and not get dissolved by the liquid inside the envelope and be shelf stable at a wide range of temperatures and humidities, and it has to be cheap. And they used HPC in designing this. So these are the kinds of things that are still cool, even if they're not at the very apex of a Grand National Lab or the Gaudi supercomputer. Entry-level HPC and engineering is also very cool. And what I love is that everybody using HPC tends to be at the expert level or forefront of what they do as an organization. And that's just fun for me to watch as an analyst. Now, I'm going to spend a few of my precious minutes on this topic because it's very important. This is the other grand challenge problem that has dominated the news, at least here in the United States, although I think race and racism is a huge topic globally as well, but it's particularly acute in the United States right now. And to the extent that this is a grand challenge problem, it surprises me that it's not one that we discuss a little more in the industry. In the United States, African Americans or Black Americans are dramatically underrepresented in our industry. Now, I'm talking about this from an American perspective right here. To move it to an Australian perspective or a Chinese perspective or a French perspective, you've got to overlay what the racial constitution of your own country is. and how the races get along with each other. But in the U.S. right now, there is a major problem with race relations, particularly with regard to the treatment of Black Americans. And I was very privileged that these 5 Black American leaders from our industry joined me on a special video podcast of This Week at HPC to give their perspective on their career paths in HPC and how we can do better. And furthermore, I really want people to think about this. If this is a major grand challenge problem, where are the HPC applications to address topics such as systemic racism? As Valerie Taylor on our panel talked about it, this is data. We have public data. Looking for anomalies in data is supposed to be something that we're good at. Is this an application that someone should take up? Can we take this up? Is this an area where AI can help us? This is a topic I would really like to see get explored. And if I have one message for everybody, this is not a revenue area for us, but it is a topic I care about. Please look up this video panel and dedicate an hour to watching it and think about how this can be brought to your own area and to your own career. Thank you for listening to that, and I'll continue with the rest of the presentation. I'm going to spend a lot of my time today on our updated high-performance computing market market size and forecast, which we've updated with 2019 actuals and 2020 forecasts, including the effects of a global pandemic going on right now, which gave us a tremendous challenge in putting together this forecast. I'm going to go through it very quickly. And of course, at a high level, our clients get full detail on all of this data, but I'm happy to take extra questions on it when I get to the end. There are 9 different published written reports that we have now published to our clients on this, according to all the different segmentations we'll go through here. First, starting off with the 2019 actuals, what actually happened year over year and how it compared to the previous year in 2018. Now, note that this is pre-pandemic, so COVID-19, to the extent that it was already underway in China in particular, didn't really have a big market effect then. So this is really all pre-pandemic numbers. The worldwide high-performance computing market reached $39 billion in spending in 2019. That was up 8.2% from 2018. That's slightly better than we forecast. We had forecast about 7.2, and we beat that. Interesting point, the government sector suddenly led in growth in 2019. The previous 6 years, industrial or commercial markets had led in growth, and which constitute more than half of high-performance computing spending. This is a reversal from years of government austerity in governments worldwide. We had conservatism in government spending in the United States, in the Eurozone, in China, in Japan, a lot of these major government areas. And now, partly due to the race toward exascale, partly due to the enthusiasm around artificial intelligence, and partly just due to regression to the mean, we're now getting government spending going again, and that will continue through the forecast. Now, this was very uneven by product and service segment. Servers and storage, which are the first things that people tend to think of as being the major on-premise hardware procurements for HPC, had much more modest growth, between 2 and 3%. What we saw very high growth of was cloud computing for high-performance computing. That's public cloud, paying services like AWS or Microsoft Azure or Google Cloud or some other public cloud provider to run your HPC applications. That had double-digit growth and has been having double-digit growth. The new thing in 2019 was a very sudden growth in what we can call cloud-like deployments that weren't strictly cloud. They were weird things. They were showing up in services, other, software, other. And when we really penetrated on it, it was things like managed services contracts, facilities outsourcing, other types of hands-off hybrid cloud arrangements that didn't hew toward traditional definitions of public cloud, but were an expansion of other types of cloud-like deployments. And we're looking at how we might update our methodology this year to better account for those in a consistent way going forward. But in the near term, very clear that those were growing as well. And then, as Alan was hinting at before, Interestingly, the top vendors all tended to decline in market share relative to others without really huge changes in rank, although there were some. But what was growing is the vendors that were farther down, including our other category of the long tail of smaller vendors, really starting to gain a lot of traction in the market. So Alan, who intimated that that was his experience in seeing that, we've measured that from a market research perspective. That's very consistent with our view of the direction that the market's been going. So some quick overview of what that looks like here graphically is 2018 to 2019. The bottom two categories there, servers and storage, you can see were really mostly flat, and those other categories that aren't those on-premise areas were what drove to that 8% growth year over year. Server revenue market share is really dominated right now by HPE and Dell, who are in a near virtual tie. If forced, HPE is slightly ahead of Dell by less than a percentage point in market share. Note that HPE did acquire Cray in September 2019 and therefore got about 14 weeks of Cray revenue, which was backloaded. If not for that, Dell might have actually been number one. HPE will have a full year of Cray revenue this year and stands to increase its lead slightly. To the extent that Cray had revenue prior to that was reported, we just moved that to the others category. It didn't really rate to put a half-year Cray onto this chart. And then you see there some of the other vendors that we tend to call out. It's a big step down to Lenovo, which is very close to IBM at number 3. Notable others, I'm going to call out one in particular here, which is NVIDIA. NVIDIA has become a server vendor of measurable quantity through its DGX, HGX reference architectures, which can be combined into superpods. You see the Selene supercomputer, which is an NVIDIA internal benchmark supercomputer, but it's in the top 10 of the top 500 list and is indicative of the sorts of configurations NVIDIA can build. We're going to keep watching that to see to the extent that we might need to break out NVIDIA as a server vendor in this space. Atos is in bold there and led the way among several of that next tier of companies that had double-digit growth really year over year. Atos, Penguin, Inspur, Fujitsu all had very strong growth. Huawei had growth because of international strength despite real trade and political problems with the United States. Just to show how little they rely on the U.S. for their HPC business, they posted growth despite those problems. Looking at storage share, here's where Dell, thanks to everything in EMC, really comes out on top. It's notable when we look at market shares here that DDN is a company that people tend to think of immediately with regard to storage leadership in HPC. They are certainly the leader in being a dedicated high-performance storage company where that's what they do. But when you look at the breadth of enterprise storage products that get used for high-performance computing and paid for out of a high-performance computing budget, regardless of whether they were specifically engineered for HPC or not, that's where you get really big presence from enterprise vendors in this space. NetApp was the vendor that really had a significant fall, and it reversed the position of HPE and NetApp. I should have mentioned Lenovo on the previous slide. In both cases, Lenovo is the largest vendor that posted growth. Vendors larger than Lenovo all shrank year over year. Vertical markets is always the most interesting slide that we put up. In terms of the breakdown of spending, not major changes 2018 to 2019. Industrial or commercial use cases of HPC, as I said before, are more than half the market by spending, 57.5% in 2019. Finance and manufacturing are the two largest commercial vertical markets. Here we show manufacturing split into large product manufacturing, which is automotive and aerospace for the most part, versus consumer product manufacturing, which is things like Tide Pods or windshield wipers. Windshield wipers can arguably be in automotive, but the other one, the construction products, These are all things that are smaller products that a consumer can buy, and that's another component of the manufacturing industry. Chemical engineering, the plastics and polymer space, has been a high growth area also in this market. So I can always take more questions on this and some of the use cases we see in high performance computing. Global regions in 2019, the big thing is that North America is the one that tends to be declining relative to the others. North America in this context is US and Canada. I get that from a continental standpoint, Mexico and Central America are on the North American continent. They are part of Latin America here. And give me a break. If you're outside the Americas, you call all of that America anyway, North and South America combined. Anyway, it's US, Canada is North America. Latin America is Mexico on south on this chart. And Asia Pacific and EMEA have really been growing relative to North America, which is now a little less than half of the worldwide spending overall. Highest growth has been in the supercomputer portion of the market, where we're designating that primarily as systems with a ticket of over $1.5 million price tag for that system. There are some other considerations such as sales cycle, architecture, and sales channel that we can consider. But the primary characteristics for these different bands of server classes is price band. The higher up you are in this, the more we're seeing growth. The primary reason for that is because cloud draws disproportionately away from the lower end of the market than it does from the higher end of the market. Entry-level, mid-range systems get displaced more easily by cloud resources than high-end systems and supercomputers do. There's some fundamental underlying growth rate that has the growth rate higher at the high end as well, but the biggest difference between these really has to do with the effect of cloud in the market. Software and services categories, we saw a decline in system software relative to the other types of software categories. Services, a big gain in systems integration was the big area where we saw growth, as well as programming services. Noteworthy thing here that happened, though, was the other categories, other software, other services. That's where both of these spiked all of a sudden, and what they were codes for those other types of cloud-like deployments. If I were paying for cloud as a service, as a software as a service model, and it was part of my software budget, and I put it there, or paying for it as a professional services, as a managed services contract, and I put it in services other. That's where these things are trending upward, and that's where they are now. We're going to look at the definitions of those more specifically for next year. Cloud categories in of themselves, raw cycles and storage are the big areas that were growing. That's because, in my estimation at least, the other higher value-added areas like environment hosting, IaaS and PaaS, or application hosting, SaaS, some of that is getting conflated with these software and services-led things that are showing up in other non-cloud budgets that are getting drawn out of the cloud category. All right, so that's the market as it is. We're going to take a quick pivot over to the market as it's going to be. But there are two things that we have to talk about here. First of all, AI, or more specifically machine learning, and most specifically the training of machine learning models, is having a significant effect on HPC budgets. We have end user data on this that suggests that budgets are going up more than they're staying, as much as they're staying stable, but certainly more than they're going down. This has a measurable effect on HPC budgets going forward, and is one of the positive indicators of the long-term growth rate of the high-performance computing market, and the fact that it's going to rebound and have a stable growth rate going forward. But there's also a pandemic going on. So at the top level, the long-term growth rate, all of those positive indicators are there, and we will see about a 7% compound annual growth rate over the next 5 years to get to $55 billion in high-performance computing spending in 2024. Cloud in of itself will have over a 20% compound annual growth rate, and that's not even counting some of these other cloud-like areas that are also going to contribute to more of that utility computing or outsourced type of model. Government sector is going to continue to have the highest growth rate, and we're going to see that continued concentration in the larger configurations for the things that stay on-premise. Those are the long-term trends. In the short term, the global COVID-19 pandemic is going to have a significant effect on these numbers, including some lost revenue. Now, most of that is short term, and by 2024, it's almost no effect. If we look at what 2024 would have been otherwise versus what it's going to be, we're pretty much on that line. We get back to where we were. That means there's no effect to the long-term compound annual growth rate because of the vagaries of how those things are calculated. So what you're going to see is a lot of wonky wiggling in the short term that we've modeled in due to COVID-19, but then we get back to the line. And here's what that's going to look like. This is my favorite quote that I like to put in. My co-founder, my partner, Chris Willard, said, when you make a forecast, it has to be bound by what's realistic. Reality has no such restriction. And that's what we're dealing with here. We didn't forecast originally for a pandemic, but nevertheless, we got one. So here's what happens. Let's say you start out with a nice smooth growth rate. Let's presume that nothing dramatic is going to happen. We start in year 0, that's before your recession, and then you have a 5-year forecast with a pretty smooth growth rate. What happens in a recession, regardless of what causes it, in high-performance computing, is that in year 1, you have the effect of that recession where the primary thing that happens, some purchases do get canceled, where, all right, we were going to buy that, now we're not going to. The majority of it, though, are sales cycles get longer. Things get delayed. Can I push it out 1 quarter? And that has the effect of some systems or other infrastructure that would have been bought in year 1 here get pushed out into year 2. And then the result is in year 2, you have everybody who would have bought in year 2, plus many of the people who would have bought in year 1, and then it got delayed into year 2. So it's the effect of you have a year with more months in it, and you get a bump. Now, the depth of the trough in year 1 is deeper than the peak of the spike in year 2, which means some things got canceled. Not all of it came back, and there is some revenue that gets lost. But overall, what you have is a bad year followed by a good year. And when you look at this growth rate from year 1 to year 2, indicated by this bracket, you see what looks like a huge growth rate. And that was because you had this artificially low year followed by an artificially high year. That growth rate isn't real. Your real underlying growth rate is the smooth one. And what you had was a short-term disruption to it. And then what we find is even in year 3 and 4, if the disruption was big enough in year 1, you still get an echo disruption in years 3 and 4. And that has to do mostly with purchase cycles and to a lesser extent with product life cycles, where you get a little bit of an echo effect that's the same as the effect was in year 1 and year 2, but they're much smaller. And then by year 5, you get back onto the growth curve you were on before. The thing is, we've actually seen this in the high-performance computing market before. This is very similar to what happened after the recession in the year 2009. And what I've done is drawn here what a smooth growth rate would have looked like, and then overlaid what we actually measured. Now, it's not exactly the same as this picture, okay, but it's also not exactly the same situation. And I think the effect of COVID-19 is actually more dramatic than what we were going to see here. But we see basically this same pattern. And then there's also another wrinkle here, which is the storage portion of the market was disrupted in here due to the flooding in Thailand during some of these years. So we had an overlay of 2 different parts of it. But when we unknit all this, we're pretty confident that we can at least start to model what happens with a recession like this. So we had to do the forecast as normal based on what we knew in terms of the demand side and supply side indicators for the long-term market, but then model the multi-year effect. And we did this primarily by vertical market. This was the number one way that we did that, because manufacturing and energy are going to have a very different effect than, say, bio and life sciences or government research labs or academia. So we see different effects in different vertical markets. That was the primary thing we did. And then we did secondary models by products and services and by region in order to rectify the model and make sure it made sense from a global standpoint, and all of the columns still added up to the same totals regardless of segmentation. So that was how that looked. The overall summary is the worldwide market is going to be 10% below what we had originally forecast, but we were originally forecasting growth. That means that we really end up with a 3.7% year-over-year decline, which is not that much. It's only a little bit of a decline, but it wipes out the growth, and then you get a decline. And then you have the rebound year after that. Overall, there's a $1.2 billion total loss over the entire span of the forecast, but that's spread over multiple years. So we are measuring some revenue lost, but the good news is that most of it is delayed, not lost. And what we should see is a down year this year, followed by a spike year next year. Now, I have to underline the last bullet point here is there's significant forecast risk here. And that is, how long does COVID-19 last as an economic damper? Not to say as a virus that exists in the world, but really in terms of constraining the economy. And that's very difficult for us as HPC analysts to estimate. This model is predicated on the notion that the economic effects are predominantly contained to the year 2020. And that by the time we get to next year, we don't really see major economic effects of the pandemic. If that proves to not be true, and there's still a major pandemic that's affecting the global economy next year, we're going to have to rip up the forecast. Well, not rip up, but continue to alter the forecast based on this, and you'll see another revision for us based on that. So this is what it looks like from a vertical market standpoint. I'm not going to get into all the different vertical markets here, but you can see the slight dip followed by the spike, which really replaces the growth from 2020 into 2021, followed by the echo effects in 2022, 2023, before we're back on the line in 2024. The hardest hit vertical markets this year in 2020 are energy, which was already looking at a very low price of oil, which tends to affect their spending on all things, including HPC, and then COVID-19 served to exacerbate that. Retail has had a huge effect. Large product manufacturing, which is cars and planes, that's had a major effect. Those are the biggest ones. Biosciences actually is a very slight effect the other way. We see a slightly bigger influx of research in biosciences as a direct result of COVID-19. So take everything I said about all the other markets and reverse it for biosciences. The government areas are all actually going to be relatively stable in this as they continue to fund research, in particular in support of this. I'm going to really breeze through the other segmentations here, but notably what happens with cloud on the product and services standpoint is cloud does the opposite of everything else, because when on-premise deployments get constrained, and I'm going to defer a procurement into next year, that's when people do more cloud to make up part of the gap. So cloud kind of picks it up both coming and going, and we're going to see a sharp increase this year in cloud utility computing as a direct result of the pandemic, just because it's more flexible. Cloud does very well with uncertainty and flexibility, and that's the situation we've been in a lot in 2020. And so cloud will, when everything else dips, cloud will spike and vice versa. Regions, the interesting thing to comment on here is not so much that there's a big difference between regions, but that it flipped from when we gave our original pre-release forecast in March, when the pandemic was really starting to get going. We thought then that the bigger effect was going to be in Asia Pacific, where China is the major contributor, and the EMEA region. Italy, of course, was already quite bad at that time, and other parts of Europe were starting to lock down, and the U.S. wasn't as bad. Now, by the time we put out this forecast, it's really reversed. We see the U.S. having a more significant effect than the rest of the world. The U.S. has done a poorer job, not only containing the disease, but is seeing a greater economic effect as a result. So conclusions, the big takeaway is HPC is a long-term stable market and will come back. And in particular, it does quite a lot to address a lot of these grand challenge problems. Now, COVID-19 is going to have a significant short-term effect where you're going to see a soft year this year followed by a big year next year. The increase in cloud computing is accelerated, as is government spending, and COVID-19 serves to amplify both of these things. I'm going to finish up with a couple of things that aren't related to the forecast. We do have a new special study on user vendor ratings. This is a broad end user survey where we looked at questions like what vendors have the best impression and satisfaction, both from a technology standpoint, an operations standpoint, a future outlook standpoint. We can measure loyalty based on current usage and intent to use again, and we can measure market share differences based on that. I'm not going to present this study in great detail because it's still in the process of delivering it in detail to our clients, but we did 8 different processor vendors, 11 different server vendors, 10 different storage vendors, 11 different cloud vendors. We could have made all of these lists a lot longer, but we had to constrain it to really roughly what we had as the top 10 in each of these areas for things that we thought people could really best comment on in order to measure them. And I will give one example of what we're looking at with the future outlook for HPC. Of these vendors who were on the previous slide, this is averages of people's answers of what is your impression of this vendor's future outlook for HPC looking forward. And it was rated on a scale of 1 to 5. So when you look at the average, if I don't care one way or another, that's going to be a 3. And anything that's above 3, which is lines leaning out to the right, is some form of positive impression. And anything leads out to the left, which is rare, is some form of negative impression of the future outlook for HPC. I only labeled some of the top ones here because it's not my intent here to embarrass any vendors, but to give you an idea of where the best user-rated future outlooks are going forward. And I will make a couple of comments. First of all, it's very difficult to get an average score of a 4, average across everybody on a scale of 1 to 5. If anyone said NA or had no experience, we threw it out, okay? But this is people who had some opinion to give and had a future impression. It's very hard to get a score as high as 4, and some people did get that. Some vendors did get that. It's rare that you see something that's negative in surveys like this, but it did come up, and I'll talk about some of those things. Under the processor vendors, obviously this is not just CPUs, but GPUs and other types of processors. You can see the diversity here of the types of things that we put on there, even 2 different ARM vendors in this list. NVIDIA GPUs and AMD EPYC CPUs both had the very high scores, the 2 highest scores across all of the ratings in all of these different categories. And it's notable that they're both higher than Intel was on the CPU side. This is a huge reversal in AMD versus Intel from a similar study we did 4 years ago, and asked a very similar question, where Intel was dominant among CPUs and AMD had a really very poor future outlook assessment from end users. That is now thoroughly reversed, and people see a huge future in terms of NVIDIA GPUs, EPYC CPUs, but also Intel Xeon CPUs. But the trend has been more toward AMD and less toward Intel on the CPU side. The server vendors, this is the one question where we combined, anything future looking, we combined HPE and Cray. The historical looking one, we kept them separate. And the inclusion of Cray really gives HP a bit of a boost here, where they're a little bit ahead of Dell. Don't worry about it too much that they're a little ahead of Dell or NVIDIA is a little ahead of AMD. Don't cut it so fine. But look at, HP is really on top, then Dell is really there, and then it drops off, and then it drops off again. So it's interesting in terms of how people are looking at server leadership for HPC. storage vendors. DDN still has a really strong impression among end users, and they're on top. I didn't label any others right there because it's a more gradual decline. It's not really a different tiers, but the cloud vendors was the one that was really raised my eyebrows, eye-opening here, where the top three cloud vendors really were the ones that had positive impressions. Then there was one that was neutral, and everything else went negative, to where there were some, I didn't on the chart go all the way down to the 1.0, which is the real minimum here, but there were two that rated below a 2, and that surprised me out of this list. So really what we're seeing is that AWS number 1, Azure number 2, GCP number 3, and then really nobody else there right now in terms of end users' ratings or future outlook for HPC. So that's another big study that we have available. Where you can find me next and hear me talk more, HPC AI Advisory Council, of course. We're going to be in the UK in October, and I'm going to be supporting that as well. FinTech Conference, HPC and AI on Wall Street in September. And then, of course, the virtual SC20. And stay tuned from us. We'll give another big market update presentation on a wide range of topics, probably in the days leading up to SC20. If you want to get information on that from us, here's a link for signing up from our newsletter. You can find that on our website. Other things from us, go find our podcast. Check it out. It's called This Week in HPC. You can find it on iTunes or SoundCloud. You can find it on our website under that podcast portion of the website. If you want to become a client, there's a link there. If you're in academia, anyone in academia can apply for free access to a research report if you need it for academic citation, and there are links on our website. You can find full lists of services and how to work with us on our website as well. That's my talk today, and I ended just on time, and I'm happy to take questions. Really, thank you very much, HPC Advisory Council, and to you for listening to me.